What's up, guys? I hope you're having a good day, but just while I have a few free minutes, I just wanted to say something I told several people I coached a while back, and I'm sure they remember, so feel free to comment. But I was telling them that Solana would drop to $23. Now, a lot of people was just pretty surprised, and I think they just thought it seemed like a ridiculous thought at the time. But I was saying that March 29th, I believe it was, when I sent out the alerts. Now, I do want to say this. I like Solana at $23. Also quickly want to say something about AMC. For anyone who was feeling discouraged, when Ken Griffin came out and he talked about, buying millions of dollars in call options and everyone's getting excited, the reason I'm not super bullish on that, there's always an up and down side, because it implies an initial run. We went up over $16, but what a lot of people aren't thinking is as interest rates rise, shorts have to pay more to stay in. Interest goes up when the price falls under $10, right? So they want to raise money to cover the fees, to stretch out the play, to drag the price down, and use the momentum of the sagging market that they foresee coming, just like I foresee it's happening, right? But it's going to get a bit worse, in my opinion. I think a lot of them feel the same way, a bit worse before it gets better. Anyhow, they want to drag the play out, and one way they can do that is by raising capital to continue covering costs. So to me, that gives them ammunition, it gives them firepower to drag out the play a bit longer. So how can you fight back against this? Well, you could wait to get the, for just one example, the AMC $30 call options at $1.50. You can wait to average down, and I'm not even going to throw up prices, but I feel the price could easy hit $6 in the next several weeks. So the point is this: whether that does or doesn't happen and you average down at $6 or $10, the closer we get to the price getting very low, the closer we are to blasting off, very psychological, the change will come rapidly. So I don't think this is a play you need to sweat. I think despite what people have said, the term apes, we all go by that term, but that's, it started as a derogatory term, you dumb apes, and come to find out institutions have a very large holding in AMC. So, we're waiting to get paid in this play. I love the play, I'm sticking in, I'm not worried about it. Hopefully you all feel the same way. This is not financial advice, none of this, but again, all I'm saying is, in a nutshell, Solana at $23, I really like it. I think Bitcoin could have a ways more to fall. I think there will likely be some support at 20. Anyhow, maybe we'll see 20 to 23 and then back down, but again, if we break the 20, we're probably going to 10. That's what I think is going to end up ultimately happening. But I think there will be some money to make in between. Anyhow, I like Solana better at the $23 range than I would like to do Bitcoin. Just like I like Cardano. I think Cardano's got a lot of good things coming up. I like Shiba Inu at these low prices. I like Dogecoin at 5 cents. I mentioned GameStop. So if you can get that for 90 or 100, I like it. I think the numbers, I think GameStop is going to explode soon. And I've already said, I think, AMC, whether they beat it down or not, I think it will explode by August, September at the latest. I think their time is running out. It's honestly hard to see it running much past August at this point. But that's all I have for you. I guess the whole broad message here is, there there's a level, in my opinion, you buy, and you know, you don't let fear overtake you. You know, again, if you want to hold off until Wednesday, it's not a bad idea just to see where we're at, early Wednesday. But you know, that's all I have for you all. I hope you're doing well. I hope nobody's losing their shirt. If you have any questions, comments, feel free to leave them. Again, in this market, there is a wealth transfer coming. There's a lot of money to make. It's just knowing when and where to get out, understanding the downward channel, and of course, doing your research, because there's clearly a lot more to it than, you know, most people realize. If there wasn't, then everyone would do it, right? So anyhow, I hope you all have a great day, and I just want to throw those few plays out for you. I do want to say, I think Gorse Guggenheim is good at $10. Your downside risk is minimal. I think if you look at the news coming out lately, I like the cars. I'm just trying to keep this brief and simple. IMPP, I still think that one's going to explode. I'm holding until $5. That one, you know, do what you feel. Revlon, as I've said, I think it'll fall to $5. I mean, I'm sorry, $1.50, and that's where I'm going in, and I'm holding until the price of the stock is at least $5, and that's when I'll pretty much sell my call options, which I mentioned was the I believe it was the January 20th, 2023 $5 call options, and around 25 cents. Some people want to get them at 30 cents. I'm not going to sell them until $3. You know, this is a pattern in the stock market. When a company goes bankrupt, it may not make a lot of sense. You know, people say it's a dying company. I mean, look at Redbox. You have to recognize these patterns and get in first. That's how this works. Redbox has run up a lot. Could it go higher? Yes. Is the risk a lot higher than Revlon at $1.50? Yes. So that's where I am at with that one. I think in this market you have to be very strategic with your plays. You know, if UVX comes down quite a bit today, you know, who knows? Maybe I could jump back in that for a run up tomorrow, UVIX or UVXY. I'm waiting till SQQQ comes down a bit, but anyhow, you know, a lot of targets have reached my prices, as I've discussed with people. Like you know, one gentleman I coach, he said Disney's down to 92. You know, as I told him, you know, I foresee $90. You know, we're going to see some hellacious lows in this market. It's hard for a lot of people to foresee and digest. That's why a lot of people have lost a lot of money. You know, you have guys out there losing $1 billion. I can assure you, I'm not taking these big losses because I'm good at what I do. And this isn't a video where I'm trying to brag, but my point is this: a lot of people don't know what they're doing. And a lot of these people, a lot of these money managers, a lot of these big billionaires, they're losing their shirts. I'm not. So that to me speaks for itself. So I try to take very calculated, mitigated risks, and you know, I do my best to keep it cohesive with those I coach. You know, nothing works perfectly, right? But you know, if you're not losing your shirt in this market, as far as I'm concerned, you're doing pretty well, because I'll tell you, a lot of people are. And again, if you've watched my videos, I've done my best to put out warnings. I put very low price targets on companies such as Amazon, Apple, Tesla, you know, just several different companies. And as I said on Twitter, 23 to 26K for Bitcoin. Obviously, we're going to hit heavy fear at those levels. 20K is the psychological level. I came back at it and I said, look, I think it's going to 10K ultimately around October or November. That's just my prediction, and I don't think it will stay there long, and then I think it will rocket up, and I think we'll have some support at the 20 range. I haven't been watching it today, so if any of this sounds like well, you must have missed this or that, I haven't really necessarily been watching Bitcoin today. Anyhow, that doesn't change my sentiment on it, and that's pretty much all I have for now. I think a lot of people are going to be looking to jump in. And again, as I said, I think Wednesday is potentially a good time to jump in. Um, you know, Patience, and possibly not till Thursday. I'm going to take it as I see it and assess it each day. I'm going to assess everything that I do assess. I'm going to look at the volume, and I'm going to see if things are starting to waterfall. I want to see I just want to see what the feds say. So anyhow, I'm just saying, I'm going to buy what I'm going to buy regardless of Wednesday or Thursday. Unless we're talking about like indexes, cryptos, there may be specific plays. As I mentioned, I will stay in or get in depending on the price, not the timeline. But in terms of indexes, cryptos, just riding the general market up, I'm not looking to even attempt to do that until Wednesday or Thursday. So I guess that's all I have for now. I think there will be a lot of great bargains in the market. I didn't come here to mention every single one. I am going to get out a video with a lot of plays that I think are undervalued and will rocket up, and where to sell them. But for now, that's all I have. I hope you're all doing well. I didn't stretch this one out too long, and I hope that's helpful for you. So again, I think if you're not scared, and you're strategic, you know what to make money in, and you know where to sell, you'll be fine. As far as Solana, after I get it at 23, since I didn't mention that, I will sell it at about probably 50% at 50, and I'll hold the other 50% until around $100, because it's a low price. That's just how I'm playing it. But how you play it is up to you. People may want to hold it longer, and again, everyone plays this a bit differently. That's how I'm doing it, and it just honestly depends. We all change our mind depending on how the market changes, economic changes. Could I end up selling it all once I double my money? It's possible. It just depends where everything is, what other opportunities present themselves at the time. So I'm just giving a general idea on that one. Gore's Guggenheim, I'm trying to hold that one till like $40 or $50. I think it's going to go up to that level, and if it doesn't, I'll hold it. That's just all there is to it. I probably won't sell until $50. I like the cars. I like the company. Let's see. It's a pretty much. I think I try to cover everything from buying to where I would sell it. And of course, AMC, everyone has their bracket, so I'm not even going to bother with that. But again, if you do have questions, feel free to ask them, and I'll do the best I can. As I said, I don't consider myself an expert, but I wouldn't want to, because my predictions have been more on target than the experts, and that's just the reality of it. That's why I'm not losing my shirt. A lot of these guys, I don't know. It's odd to me to see, like, I guess the huge, like, people seem so shocked by these drops, and I don't know. I think it should be expected. That's what I've tried to warn about. I have, and I don't have a huge audience, but I've tried to put the word out there as much as I can. On TikTok, on YouTube, on Twitter. I don't have a big following. I have a pretty good circle of people I speak with. I got the word out as much as I could. Obviously, I haven't established myself, to where I'm, recognized by enough people to help enough people. But I tell you, I tell you, man, when I hear people losing this kind of money, I just think, good Lord, I wish I managed your money to help you from getting smoked, because I knew this was coming, and you should have known too. You can't be so far removed from the current economic climate, and knowing what's coming, knowing the average American, knowing how they're doing, how this impacts the economy. I mean, look at the state of everything right now. I mean, it's common sense, So the money managers that have lost a lot of money, I just think gosh, you need to not be so far removed from reality, you know, and that's why I warned about bull traps. You can get smoked. They were putting, you know, bear traps in the market, bull traps in the market, but ultimately, you know, the bull traps are the most concerning in this market, right? Your bear traps are going to be temporary in a downward channel, at least for the time being. So that's all I have for now. You know, let's see what happens Wednesday, Thursday in the market. Always have patience, patience to buy, patience to sell. Don't overextend yourself. Have a savings, have cash on hand. Don't spend money you need to survive on. You know, peace of mind is very important. You know, whether you're investing in gold, silver, whether you have a car collection, whatever you do, you know, your capital should be allocated to where you can't be wrecked. Diversification is key. That's what sometimes people say, you know, let's say someone's investing $20,000, you know, I'll often suggest 20 different plays. Well, if you plant 20 apple trees, you know, how quick are you going to get more chances of getting fruits? And it's a numbers game. This is a numbers game. Algos matter. The algorithms, picking your top 20, you're going to have better success than picking 5 or even 10. So anyhow, there's a lot of ways to do this game. Everybody has their own method. I like to make predictions. I like to stick to those. I like to have patience to buy at these targets instead of getting wrecked. That's why I like to tell people sometimes I don't just jump in. Some people just want to stay invested, and that's fine. You can do what you want to do. But you know, I've had a lot of people tell me, you know, you can't time bottoms, and that's fine. Maybe you can't, but I can. I do, and that's where I get in. Now, does that mean I never have to dollar cost average? No. No one is perfect all the time, but generally, yes, I can predict the bottoms. When I see a chart, I see behavior, I see emotions, and that's what I see, and that's what I go by. And I read candlestick charts, and the way I assess the market is it's very strategical. I'm very careful, and I know how institutions and hedge funds think. And you know, I follow options expirations, and I follow a lot of data, and I am not going to lose my shirt in a market, period. It's just not going to happen. So I think it's very important that everyone does your research, you know, mitigate risks, whether that's buying inverse ETFs once they compress the VIX again, or if you go in real deep in something like Redbox, and this is not financial advice, you may want to have some puts as a hedge against your risk if you go in really high. It is a risk. So that's totally up to you, but that's not something I'm suggesting. Like I said, I'm more into Revlon at $1.50 and holding on that one. So and going deep. That's just me. Do what you want to do, but recognizing the patterns in the market is where it's at. And honestly, with stonks, no sense makes sense. It just doesn't, you know. I was joking with someone about the Charles Manson quote, you know, and it's really true sometimes. No sense makes sense. You know, they want to save these bankrupt companies. They always do it. It's a pattern. They'll keep doing it. That's just what they do. That's why when I see these spikes, you know, I start watching it. I start buying in a little low. I try to be very careful in recommending these before I see that they start to get any momentum, though. I want to see a little bit of momentum and then some pullback. You know, I want to see some interest starting to develop. Anyhow, like I said, $1.50 I think on a dip is a good idea. You know, you want to get in Redbox at whatever, $12, wherever it is right now, or you want to get in this at $1.50. You know, when they're going to, you know, that what they want to do is save companies. It's however you look at it, whether that's, you know, their bleeding hearts wanting to save a company or just pump the prices up, you know, and then institutions get in, and you want to get in before the institutions really start running in on these, because they do. And if you don't get in first, they're going to wreck you at some point. So anyhow, that's all I have. I hope you all have a great day, and I will see you on the next one. Peace.